Hi, welcome to SwissCJ-Fx, and I want to discuss about the importance of psychological levels. So, what is psychological levels? Psychological levels refers to the specific price levels in the chart where institutional investors as well as normal retail traders are attracted to. And the reason why this is called psychological level is because of, humans' perception or humans, behavior towards round figure rather than decimal figure, right? For instance, when you go and buy something, it's difficult to bring out money in terms of, like cash, in terms of decimal figure compared to when you want to bring out money, as a round number. So that's why it's called psychological because humans have a high affinity or high tendency to respond to round figure rather than decimal figure. So at this level, there are three things that actually happen at every psychological level. Traders that use psychological levels, you know, is as good as one using Fibonacci retracement tool, right? So the purpose of using Fibonacci retracement tool is to find out the level by which when price gets to that level is going to reverse. Right? So the same thing goes with psychological levels. So there are three things that happens whenever price gets to a psychological level. Right. So the number one thing that happens is not in the order of Israel, but there are three things that actually happen. So number one is consolidation. Right. So you understand what I mean by consolidation. So that means that price hits a support, then comes down to resistance, then it hits the same level of support and comes down, hits the same level of resistance. So like let me just give an instance of a consolidating market. So you see price move like this, and again it comes down like this, moves like this. So this is what they call consolidation, right? So then the second thing that actually happens at the psychological level is what I will call the reversal, right? So this is one of the main, how will I put it now? This is one of the main things most traders look out for whenever you use psychological level. So reversal in the sense that, for instance, maybe this is a psychological level, right? This is psychological level. So it is presumed that when price moves from here to this place, it's actually going to hit here and it will reverse, right? So that is one. Then the third thing that will happen for the psychological level is the breakout, the break and retest. So what do I mean by a breakout or breakout retest? So this is the psychological level. So when price gets to this level, it tends to break out, or it could break out, retest, then finally move in the right direction. And so I'm going to give a live example right here. So for instance, let me draw a psychological level right now. So this is, remember, psychological level is whole number. So this is the gold chart, right? And so is actually a four-figure pair. So right now this is 4,300. So this is a round figure. So so traders have more desire to place their trade or put their TP at this level than different decimal figure. So right now, so this is a psychological level. Now let us now see if we can find this level. So number one is consolidation. So where in this psychological level do we find price consolidating? Okay, so number one, I think we found somewhere. So number one, you can see that the price kind of consolidated at this area. We've seen a place kind of consolidation occurred at this level, right? Then, okay, so we've seen another place, this area, price tends to consolidate at this area as well. So this is what happened, right? So those are the two. Then next thing we look out for is reversal. So is there any place where there's when price touched there was a reversal? Okay, I think we've seen something like that at this point here. So price tend to consolidate, so it tend to reverse at this level. There was a reversal at this level. So price came, it hit that area, then it reversed. So then the next one we look for is this market breakout. So you can see that at this level, price actually broke out at the psychological level. Price was a break and retest that happened at this level. All right, so you can see that these are the main things that happen. But what most traders, including institutional traders, what they actually look out for is the reversal. So trading using psychology level is, I would say, one of the is a very easy way of trading, right? So I want to go to other pairs so that you see how to actually, how psychology level influences those price movement also. So let us pick any like this one is US 30. So this indices. So now we'll place here. Then let's just say 46,300. So you can see that this is a round figure. All right. So if you look at here, you can see that a lot of consolidation will be happening at this level, right? So definitely from what I'm seeing here, I believe that price is actually going to come here, test this level, then finally go up, right? So you can see how important the second level is. You can also draw on that one so that you're able to see it. Right? You can just pick anyway then. Let's say 40, 45, 850. So this is a round figure that people are used to. So if you look at it, the same thing, you can see that price